4,300 cars. That's how many BYD sold in Brazil in just 48 hours, shattering their previous record by 64%. Meanwhile, Toyota's CEO stands before 500 suppliers and says, "Unless things change, we will not survive." The global auto industry is transforming before our eyes, and today we're covering it all. Let's dive in. BYD has done something extraordinary in Brazil. In a 48-hour campaign between March 20th and 21st, they sold 4,300 vehicles. That's not a monthly number. That's a weekend. The Saturday alone saw 3,217 orders, the highest single day in the company's Brazilian history. What's driving this? A combination of aggressive pricing and smart strategy. The BYD Dolphin Mini with installments starting at just 999 reais. Zero interest financing. Free maintenance packages. And critically, these are cars built in Brazil at their Camaçari factory. The campaign mobilized all 211 BYD dealerships across the country. And here's what's interesting, São Paulo led with over 1,100 units, but the Northeast surprised everyone by taking second place with 810 orders. Electric vehicles are no longer just from major cities. They're spreading across Brazil's entire geography. Bloomberg just published a feature asking how Chinese automakers are rewriting the rules of the global auto industry, and one example captures it perfectly. A Leapmotor C10 was driving down Germany's Autobahn when its driver assistance system malfunctioned, braking sharply as if boxed in by scooters in a Chinese megacity. Leapmotor's German head emailed engineers in Hangzhou before going into a meeting. By the time he got out, a software update had already been beamed to the vehicle, fixing the problem. Bloomberg's assessment, a similar fix at a European carmaker would have taken weeks. This is what Bloomberg calls carmaking center of gravity shifting to China. It's not just about cheaper cars anymore. It's about fundamentally faster innovation cycles, integrated software development, and the ability to respond to problems in hours rather than months. CNN published an analysis this week titled, "The worst oil crisis in history comes at a good time for China's troubled EV giants." With crude oil hitting $119 per barrel and 30 to 40% of Gulf refining capacity damaged, the global energy picture looks grim for most countries. But China is different. While the Asian giant imports over 2/3 of its oil, its rapid adoption of renewables and EVs is helping it weather these price hikes far better than others. Ember, the energy think tank, estimates that global EV adoption already avoids 1.7 million barrels per day of oil consumption. That's about 70% of what Iran was exporting. Tu Luo from Sino Auto Insights puts it bluntly, there's potential for Chinese brands to make a ton of inroads into Asia on the backs of higher petrol costs. China's energy security strategy, built over years, is now proving its worth in real conditions. When the world's largest automaker by sales says it might not survive, you pay attention. Toyota's outgoing CEO Koji Sato stood before 484 supplier executives and delivered a stark message: unless things change, we will not survive. I want everyone to acknowledge this sense of crisis. Right now, we in the automotive industry are battling for our very survival. The problem isn't one thing. It's everything. Chinese automakers are setting new standards for manufacturing costs. Software is becoming a core part of vehicles. The industry has seen more upheaval in recent years than in the last several decades combined. Toyota is now relaxing its legendary quality standards. Previously, they rejected headliner boards with tiny black spots no customer would ever see. Steering wheels with imperceptible wrinkles in the resin. Wire harnesses were dumped at 10,000 units per month for slightly discolored plastic. That era is ending. Even Toyota has to change. The numbers coming in from around the world are staggering. In Australia, EV sales jumped 95.9% year-over-year in February, claiming nearly 12% of the market. That's up from just 6% a year ago. MG Motor reported inquiries at 220% above normal. In New Zealand, dealers say EVs are now selling off the boat before they even arrive. One dealership has sent 2 buyers to Japan trying to source more vehicles as fast as possible. Bank loan applications for EVs have roughly doubled in 2 weeks. In the Philippines, a BYD dealership booked a month's worth of orders in just 2 weeks. The pattern is the same everywhere. Rising fuel prices are pushing consumers to make the switch they'd been considering. The math has changed overnight, and millions of buyers are doing the calculation. Here's a counterintuitive market shift. New EV sales in the US dropped 28% in Q1 after tax credits ended. But used EVs? They're booming. Sales hit 93,500 units in Q1, up 17% from last quarter and 12% from last year. The selection has transformed. A few years ago, used EV buyers chose between Chevy Bolts, Nissan Leafs, and Tesla Model 3s. Now there are discounted BMWs, long-range Hyundais, and more. 44% of used EV transactions in February were under $25,000. Here's the key stat: for used cars under $20,000, the average used EV is 2 years newer and has 40,000 fewer miles than a comparable gas car at the same price. With nearly 400,000 lease returns expected to flood the market in 2026, many featuring affordable Chinese batteries, the used EV market is becoming the entry point for mass adoption. From BYD's Brazil blitz to Toyota's existential warning, from Chinese software innovation to the global EV demand explosion, the auto industry is transforming at unprecedented speed. And in many ways, Chinese companies are leading that transformation. That's all for today's China Tech Insider. If you found this valuable, hit subscribe and I'll see you tomorrow with more from the forefront of Chinese technology.